Hello and welcome to our latest urgent market update video. Now today is Friday the 21st of April, brought to you of course by the live trade room, and we've been waiting all week to sort of put one of these videos out which was like definitive in a certain way. Yes, we've got coherent market conditions and we've got breakouts either to the upside or to the downside. But in the end, what we kind of have to settle with is this urgent market update video, which is just looking at in a bit more detail exactly the way things are right now, and they are quite frustrating market conditions. And broadly, what we can see is these markets are currently very indecisive. So that's from a technical perspective. If you look at a lot of major markets, we've got indecisive price action, a lot of consolidation, low volume, quite choppy, up and down sort of erratic moves. And it just creates overall an indecisive type of trading condition. And then we'll have a quick look at what's driving these markets right now. So there's a lack of meaningful news in these markets over the course of this week. That's one reason. Plus, we have some indecision from bond markets through to economic data, and it's sending mixed signals across the board. So we'll kind of break it down in a little bit more for you. But for us as traders, we're wanting to identify high probability trades, and those are few and far between. Very select opportunities at various different times we can, of course, look to engage with and get involved with. But we do want to just highlight these current market conditions because it is important for you as a trader to understand these market conditions because they change and evolve all the time. We're just going through this quite tight range. So without further ado, let's get straight into it then. We'll start, of course, with our risk warning. Just take a brief moment to familiarize yourself with our risk warning currently up on the screen. And let's get straight into it then. So we did mention that these markets are broadly indecisive. Let's have a look at that from a technical perspective. Firstly, currently up on screen, you have the S&P 500. And if I bring up my pen here as well, I'll just draw attention to these current market conditions. If we zoom out a little bit more, and we can take into account all of last year's very significant selling. We basically bounced off to 4,800 right the way down towards the end of October, down to 34.91. So a really significant corrective move. But the question is, what's happened since then? So what we've seen since that period is a pretty significant pullback. We've retraced probably 40% of this bearish move from high to low. And we've created a series of highs in here, going back quite a while, all in and around this type of level in here. So we can identify this little range at these highs as, fairly strong levels of support and resistance. We're just saying broadly we're in around that sort of level. And we have had a sort of a 40% retracement of this low down here. So the next thing becomes, right, well, where are we at, during this little time frame? And really, we've had a strong move to the downside from January and through the month of February. And then we've had a pretty strong bounce. But we've bounced back into these previous highs. So the overall picture, when you zoom out, is not that clear. And then when we go into the more detailed price action, of course, we can see that there is strong resistance around these highs, coincide with these recent highs here over the last few days. And like I said, we've been waiting to post this video just to see, would we get any clarity and would we be able to say, right, well, now we have close to the upside with conviction, we're on to the upside, this is what we're looking at. But instead, we've had 3 weeks of pretty much this price action, which is purely, and this is why we really refer to these markets as indecisive, because are we supported by risk on or risk off market conditions? The answer, unfortunately, is we don't really know yet. We've just got a big question mark over these markets. So that's our takeaway. And if you look across all these other markets, they're all in a very similar boat. So the US indices, we've had these two little long-term periods of sideways moves. We're still in that sort of sideways moving pattern. The Dow Jones, this is the Dow Jones currently up on screen. The Nasdaq, we're broadly up at these higher levels, but nothing but pure indecision for the last three weeks. So we either need that little breakout to the downside, or we need prices to actually, drive consistently to the upside. At the moment, we kind of have neither. Outside of these markets, I know many of you like Bitcoin. If you look at the Nikkei, we're kind of globally in this little, quite long-term sideways moving pattern in this little zone. And we're up at these higher levels now. So the question becomes, are we going to get this little breakout to the upside in some of these markets? We don't have enough data to be able to decide. So then the question becomes, right, well, what's fundamentally driving these markets? Bitcoin is quite a unique environment. We've had this move here broadly due to the banking crisis that we've seen a lot of capital come out of sort of middle tier banks in the US, and some of that capital has gone into Bitcoin. So there's been short periods of kind of explosive moves to the upside. The majority of the price action is pretty sideways moving, and more recently it's actually looking a little bit more bearish. So we don't really have any clarity from that perspective either. So broadly, I suppose more recently we are risk off, but there is a distinct lack of kind of direction and drivers in these markets. Oil has only sort of managed to pull back. We've had a bit of a move to the downside where prices, we were able to get down to $64 and then a strong reversal back up to 83. And this little gap in here is just basically due to OPEC deciding to restrict the supply of oil in the markets to the tune of 1.1 million barrels per day. So broadly, this market is very much drifting sideways, and we're at kind of that middle tier now. What we are doing is potentially closing this little gap, which would be important. And the question is, do we have a strong bias to the upside or to the downside? Fundamentally, over the more sort of medium term, it's probably higher eventually. But as you can see, we've got pretty zero conclusions to be drawn right now. This is what we're looking at for gold. We had potential very significant upside moves. We've had a couple of periods of decent upsides. Now it looks like we're on the verge of kind of breaking back down, but breaking back down into support levels. And we're just seeing that across the board. I hope you get the general gist. If we look at the euro dollar and the pound dollar, you'll see exactly the same price action. This week has been a pretty kind of choppy trading week with very little clarity across these markets. And it's really, we've got indecision from the bond markets. They're in the same position. The equity markets, the currency markets, the commodity markets. And we do trade and focus on the most liquid asset classes out there. So yes, there might be opportunities in less liquid markets. We appreciate that's the case. Sideways moving across many of these markets. The dollar yen, we had potential upside there during the week, which is just kind of reversed. Really, we've not made any major progress all week. And in fact, it's looking a little bit more bearish for the dollar now at this stage. So very much up and down across these major markets. Let me just show you perhaps the bond markets, what they're doing. Is there any more clarity on that side of things? If we just look at the 2-year as a bit of a test case, we were up at 4.27 yesterday, and the general correlation for these markets is bond yields down, equities up. So that's why we start to see a bit of a rally in the equity space when these bond yields were rolling over to the downside. But recently, we're in a bit of a sideways pattern again. We're kind of firmly within this little sideways, little consolidation period across the bond markets. So that's not providing any kind of clarity. There was the potential for a bit of upside yesterday. So yields up, equities down. That's what we were looking for. That didn't materialize. So the question is, we've identified choppy markets, sideways moving predominantly across all major asset classes, and even the bond markets as well are not providing any clear-cut direction. So the question is, what narrative is driving these markets? And we've actually, that's a difficult one for us to answer, because at the moment we keep sort of flip-flopping from one to the other. So 1 minute we're in this risk-on market condition, next minute we're risk-off. This is this up and down type narrative, and you're hearing talk about Fed rate pivots and pausing, more of a dovish Fed, and that's switching from a hawkish Fed to a dovish Fed, and soft landing, hard landing, recession fears. Actually, the economy is performing well, so that's providing a little bit of an up. So really, it's a case of pick your narrative, because at the minute it's proving quite challenging across all these markets. So from most days this week, we've had some aspects of this risk-on phase play out, and on other days we have aspects of the risk-off trade play out. But very little seems to be sticking, and we get a lot of that intraday price action and a lot of whipsawing going on. We've been relatively conservative with our number of trades. Trade frequency is very low for us at the minute, especially this week. And then, of course, next week, trade frequency has been very, very low this week. We'd normally like to be getting into 2, 3, 4 trades per day. I think we've averaged kind of 1 trade a day, and they're much smaller with our trade size. So we are taking the precautions that are really required right now to navigate these current market conditions. So then we've got to ask ourselves, where is the next driver coming from? Well, it's probably going to extend from your central banks in terms of whether they're the relative central banks are hawkish, looking to hold, or indeed are a little bit dovish. Just looking forward to next week's news, or projecting forward to next week's news. We've got some bank holidays to begin the week. Consumer confidence across the US will be an interesting figure. We've got these unemployment claims, which are beginning to tick a little bit higher. Still, in terms of historic unemployment claims, we're still very, very low and almost a bit of a non-event. However, a case could be building. We'll be hearing from the BOJ, so expect a lot of volatility in the yen in terms of their yield curve control. See if they start loosening that again. And we'll have this core PCE. So the next bit of major news is next Friday for the US economy in terms of an inflation figure that the Fed themselves are looking very carefully at. So what we can say for sure is that this indecision is probably likely to continue. It's searching for the next, the next reason to discount. It needs to react to something external, some stimulus. And next week's core PCE numbers, that could be the next inflation data that could potentially drive these markets. So there's a lot of, from a technical perspective, there's a lot of up and down in these markets over the last few weeks without making, like I said, any major move with clarity. It's just very range bound. So do bear that in mind. We just wanted to break it down for you in a little bit more detail, and the fact that we're finding it very challenging to decide, what narrative we should be looking to exploit, because at the minute they're just flip-flopping from one to the other. So if you're finding these markets difficult right now, it's to be expected. This is what these markets are doing. The good news is all trends start from consolidation, and we're getting an awful lot of consolidation now. So if we can be conservative, if we can be if we can stay nice and calm, of course. Don't panic, don't overtrade, don't oversize. If we can make conservative decisions now, we can be a lot more aggressive when those market conditions begin to change, shift, and evolve. It's just, we've been through this many, many times before. We'll go through it again many times. But just wanted to point out as clearly as we possibly can the fact that we do have this mixed market environment, and it's very difficult to make consistent trading decisions off the back of price action that's pretty much moving sideways and giving us no significant clarity across the technicals, also across sentiment as well, and across market fundamentals. So that just breaks things down for you in a little bit more detail. Patience is really important, and take steps to reduce trade size, be more selective, reduce trade frequency, be more selective, and also reduce that trade size as well. And we'll find a way forward at some point, but for now, patience is very much on the cards. So you may have some questions about anything covered in this short video. So if you do, feel free to email us at support@thelivetraderoom.com, and we will get back to you as soon as we possibly can. So on that note, thank you very much for joining us as always. Do stay tuned for our next video. We will be broadcasting that as soon as we have something interesting to talk about, really. We do broadcast, just to let you know, we do broadcast our trade plan sessions live every morning from 7:30. And what you will notice this week is, we're just trying to hammer home the fact that it's important to be quite conservative and be quite patient right now. So these trade plan sessions are really important in terms of not throwing away some of your capital. You don't want to take a large percentage hit on your capital during these conditions and suffer when the market conditions change. You won't have the capital to be able to exploit the big moves when they arrive. So these trade plan sessions are very important, even during these quite tough, challenging market conditions. So that's at 7:30 every morning UK time. And then we trade live from 8 a.m. for the European session and at 12:45 p.m. for the US trading session. So if you want to join us for those events, you're very welcome to. That's Monday to Friday, every single day. We're always here. For more information, just go to thelivetraderoom.com. So that just about concludes this short video. From everyone here at the Live Trade Room, thanks very much for joining us, and we look forward to seeing you next time. Bye for now.